Okay, traders, welcome back to the channel. Here we have the 4-hour chart of the GBPJPY, or GJ for short, and we're going to be going over specific concepts relating to the New York midnight opening price and how you can use this price when it comes to a London manipulation and a London fair value gap. So we're going to be focusing on time-specific liquidity concepts in this particular video. But just before we get involved, I just want to say that at Liquid FX, we're offering 30% off all packages. That's including the free one-to-ones. Within the community, you get a 5-day free trial, and you get the full ICT simplified course as to how I look at the trade, how I look at trading from an ICT perspective, and how you can simplify down your entry models to pretty much any time frame you choose to trade. So if you're interested in that, we have a 30% discount code, which is currently on your screen, Easter sale. So with that out of the way, let's have a look at GJ. So GJ here currently is giving us our bullish structure. We're focusing on a trade specific case study down here. So if we dive into the price action just over here on the 4-hour chart, what we had over here is we had a POI over here. We had a fair value gap over here. Wasn't quite the best pricing. We saw price just about respect this. The wick stayed in. I was ultimately expecting price to come down to some of these discounted areas. It didn't quite do that based off this equilibrium price here. But nevertheless, we saw a bearish momentum after price had broken this high, like I've discussed in the previous video. We saw price distribute lower after breaking structure, right? So we're going to look at how you could have got involved in a bearish trade. But more importantly, we're going to be discussing the New York midnight opening price. So with that being said, if we now go down to the 15-minute chart, we can really begin to dissect how you can use this particular price action or this particular price technique on any price action market, particularly pound pairs, right? So here we have the GJ chart on the 15-minute time frame, right? So what we have over here is we have the Asian range that's always depicted in orange. So this orange box over here represents the Asian range, right? So the Asian range is a low volume time of day that aims to build liquidity and engineer liquidity in the markets. So what we have at the end of the Asian range, right, is we have something called the New York midnight opening price. So this New York midnight opening price forms at New York midnight opening, at midnight New York time. Surprise, surprise. So we have the price action over here. So the last candle of the Asian range, that's 5 a.m. UK time, which corresponds to 5 hours before, 5 hours back in time, which is the New York midnight opening price. What you want to do very simply is you want to draw a line from that candle across to the left, right? Sorry, across to the right. And this here is the New York midnight opening price, or 0000 Eastern Standard Time, right? So what do we see here in the markets when price actually moves this way, right? So what we see is we see price consolidating through that Asian range, giving us the low volume time of day accumulation session in the markets, right? So after this, as price begins to open up, so this is a pound pair, so we expect volatility in the London session. So as price moves away outside of the Asian range, what we see over here is we see a very clear sweep of the New York midnight opening price. So just to give you a schematic to the top right of your screen, right, what we're looking for is we're looking for an accumulation, and at the end of the accumulation, we're looking for price to sweep the accumulation before displacing lower with a fair value gap, right? So what we're looking for is we're looking for price to give a very clear sweep of a liquidity point, of a data point, right? Think of this as a data point. This here is a data point in price, right? It's a manipulation. So I typically use the yellow box to represent an area of manipulation, right? So this is an area of manipulation over here, right? It's not the high of the day, because the high of the day is, remember here, the Asian high. But this forms as what I call a London manipulation. So this is one of the entry models I use when it comes to trading, right? It's a London manipulation, right? So what does the London manipulation actually do? Well, the London manipulation aims to manipulate the New York midnight opening price. So it's a very powerful technique when it comes to understanding time and price theory, right? You're looking specifically for this particular move to happen anywhere between 2 a.m. to 5 a.m. Eastern Standard Time, right? So you're looking for price to leave the Asian range and give a manipulation sweep anywhere between this time. So this particular manipulation happened at 8:30 a.m. UK time, which corresponds to 3:30 a.m. New York time, right? So that's this is a prime setup. This is a prime liquidity sweep over here, using London volatility to your advantage, right? So using London volatility, a question I often get is, oh, liquid FX, how do I trade the London session, right? Well, typically the London session is going to manipulate some form of liquidity before making a fair value gap, before displacing market structure and making a fair value gap. Often a market structure displacement and a fair value gap will very often, 90% of the time, go hand in hand, right? But in order for you to look for a market structure displacement, look for a market structure shift, and in order for you to actually classify a high probability fair value gap, it's important for you to understand where the liquidity pool is, or where the liquidity pools are, and when they are likely to get manipulated. Because remember, ICT is very simply time before price. It's not price then time, it's time and then price, right? So when people hear that, they often say, oh, time and price, right? But time and price means you're looking for a certain session to sweep a certain pool, a certain pool or a certain data point of liquidity prior to your entry, right? So when we have a New York Eastern Standard Time midnight price over here, this represents the IPTA reset, right? So what we're looking for is we're looking for price to trade above the IPTA reset as a form of manipulation, a London manipulation, very typically for pound pairs. This is GJ, remember, GBPJPY. And then after we see a London manipulation, the market structure shift happens just over here, and we see a volume imbalance, or simply a fair value gap over here. Fair value gap gets produced over here. Fair value gaps I often label in blue. So now that we've seen an accumulation, manipulation, and distribution, this is an ICT AMD model, right? So this is the AMD model, or the power of three model, right? People call it AMD, not power of two, power of three, sorry. So this is the power of three model, or the AMD model, right? All coming back to the idea of fair value gaps, structure shifts, market structure shifts, and accumulation. But it's understanding when specific sequential price action movements happen. It's not a pattern. We're not looking for a specific pattern. We're looking for data points to be swept at certain time points, right? So you want to draw a line, right? Draw a line from this price over here, the New York midnight opening price. Look for it to be swept in a specific time window, and you're looking to key off a fair value gap, right? You're looking to simply key off a fair value gap just like this. Your safe stop loss placement, again, this is another advantage of trading ICT, and specifically the power of three, is it gives you a safe and high probability area to keep your stop loss, which it has a lower probability of actually getting swept or getting hit, right? So you don't want to get swept out of your trades. And this again gave a nice 1 to 4, I believe, right? Really following the momentum down into the next day, right? Just like this. But the following day gives the exact same overall price action, right? Where we had the Asian range over here. We use our magic line, right? This is the end of the Asian range over here. We push it across to the right, and what do we have over here, right? We have an accumulation, right? London opens around here. We have price manipulate higher before manipulating lower, right? So what we see is we see a very clear manipulation in London, very typical of pound pair. So please do some back testing on that. Again, we have our manipulation over here before our market structure displacement just down here, right? Using the simple concept of accumulation, manipulation, and distribution. So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.